Hi students, how are you? This is N. Srinivas Reddy, JL Commerce, TSWRJC Athanura. Students, in the previous video we have discussed the problem when a new partner enter the business only with the cash. He is not taking any amount as a goodwill. In that problem, old partners themselves, they are creating the goodwill and they are crediting that amount in their capital accounts. That is the problem. In this problem, written off the goodwill created by the old partners. So here some of the partners, they are not showing goodwill in the balance sheet because goodwill is a intangible asset, so it is not tangible. There is no asset, only they are showing the goodwill. It is the fame and name of the company, but many members are not willing to showing the goodwill in the balance sheet. At the situation, they are creating the goodwill and written off the goodwill with the entering of the new partner. So in this problem I am discussing that this is the 15th problem, students. Already we have discussed the 2 years the Naidu and Shekhar are partners sharing profits and loss in the 3:2 ratio. It means if you tell it in the fraction, 2/3/5 is to 2/5. Their balance sheet as on 31st March 2020 was as follows. Here the bills payable is the 40,000, creditors 60,000, outstanding expenses 40,000. Next is the RAM capital is the 3,60,000, Rahim capital is the 3 lakhs, total is the 8 lakhs. So here the cash in hand is the 20,000, cash at bank is the 80,000, debtors is the 1,20,000, stock is the 80,000, machinery is the 2 lakhs, buildings is the 3 lakhs, total is the 8 lakhs. Now there is some adjustment is there. On the above date, Harish was admitted in the partnership for 1/6 share. So they are giving the share is here 1/6 for the old partner. The terms of admissions are follow. Harish should bring 2 lakhs as a capital, and the stock appreciation is 20,000. Machinery depreciation is 26,000. It means we are show the stock 20,000 on the credit side and the debit side is 26,000 in the revaluation account. Outstanding expenses 10,000 not required. So here these outstanding expenses showed in the liability side. Here they are telling it is not there is no need to pay these 10,000. So that's why it is the profit of the firms. That's why it will be shown on the credit side of the revaluation account. So students, when the problem they are asking, they are telling the any outstanding expenses, any liabilities, if it is not no need to payable, that is the income to the company. That's why that will show on the revaluation side, credit side of the revaluation side. Next is the goodwill of the firm is valued 60,000. Here the goodwill of the firm is 60,000. This is written off immediately. So this is written off immediately with the 3:2:1 ratio. Initially they are distributing the two partners into 3:2 ratio and written off with the 3:2:1 ratio. So now they are asking to prepare the balance sheet, prepare necessary ledger accounts and balance sheet of the new firm. Now students, we are going to do the problem. First of all, we are prepare the general entries here. So now first of all I wish to change the color of ink, that is the black. I am taking the blocking. Initially date, particulars, LF number, debit rupees, credit rupees. So first of all, here Harish bring the capital as a 2 lakhs. So entry is cash account, debtor to Harish capital account. Amount here is 2 lakhs. Next one is they are creating the goodwill by the old partners on the ratio of 3:2. So the entry here is goodwill account debtor to Naidu account to Shaker account. Here the Naidu account is 60,000 goodwill. So it is distributed to the 3:2 means 36,000 and 24,000. So these are the creation of the goodwill, and now we are written off it with the new partner. It means Harish. So here the entry will be reverse. Naidu account debtor, Shaker account debtor, Harish account debtor to goodwill account. So we are creating the goodwill, we are written off the goodwill, that's why it will not come into the balance sheet. 20,000, 10,000. So here the 60,000. So next is the stock is appreciated. So here the entry is stock account debtor to revaluation account. Stock is depreciated by 20,000. So now we are going revaluation account debtor to machinery account. So here the machinery is depreciated by 26,000. Next one is outstanding expenses. So it is a decreased. That's why it will be credited on the revaluation account. Outstanding expenses account debtor to revaluation account. Here the amount is 10,000. So these are the general entries. Now we are going to prepare the revaluation account. So here the stock is appreciated by 20,000. Stock appreciated 20,000. That's why it will be created, and outstanding expenses is decreased by 10,000. That's it is a profit to the firm. That's why it will be created. Next is the depreciation on. Here the depreciation on machinery. Here the 26,000. So these are the entries here, and is now we are tallying it. So here the credit side is 30,000, debit side is 26,000, difference is 4,000. This is the profit. This amount will be distributed between two partners. The partners is Naidu capital account to, next is Shaker capital account. So initially first candidate is 2,400. His share is 3%. Next share is 2. So this is the revaluation account. Next we are going to prepare the capital accounts. So here initially Naidu, Shaker, Harish, Naidu, Shaker, Harish. So we write the rupees also, because we are enter the figures, that is the rupees. That's why we will write the rupees. Next, by balance. Here the balance is 3,60,000 of Naidu, 3 lakhs of Shekhar. Next is by cash. Here Harish come with the organization with the amount of 60 lakhs. That's why it will be debited. Next to the students, we are credited the goodwill. That will come into the credit side of two partners, 36,000, 24,000. Next is the by revaluation account. So we find the revaluation account for the Naidu is the 2,400, Shaker is the 16,000. So here one more entry will come. We are creating the goodwill with the old partners and written off with all the partners. Naidu is the 30,000, Shaker is the 20,000, Harish is the 10,000. So even here Harish is not taking any amount as a goodwill, but old partners, they are taking the some amount from old partners because of creating goodwill and written off with the old partners. So here the totaling is 3,98,000 for Naidu. Shaker is 3,25,660,000. So here 3,98,400, 3,25,660,000. So here the Harish balance is 50,000. Shaker balance is 3,05,600. Naidu balance is 3,68,400. It is called to balance. Next we are going to prepare the cash account. So here the cash is, so here the first is to balance. Anytime assets account shows the debit balance. Here the balance is 20,000. It is shown on the asset side of the balance sheet. Next, Harish capital account. When the entering of the Harish, you bring with 60,000 capital. So that's why we are entering it here. So Harish is the total. Here the cash is 80,000. Here the by balance is 80,000. Next we are going to prepare the goodwill account. So here the amount rupees. So here is also mistakenly put. It is particulars. It is amount rupees. So here we write the entries at the time initially goodwill account data to Naidu account. So to Naidu account here is 36,000, to Shaker is 24,000. When the written off the goodwill account, we are writing all the partners account data to goodwill account. So that's why it will come into the credit side. Naidu is the 30,000. Shaker is the 20,000 by Harish is the 10,000. So here we are creating the goodwill with the old partners and written off the goodwill with the all partners. So now we are going to prepare the balance sheet. So here now we are going to prepare the balance sheet. So now we are going to prepare the balance sheet in this problem. rupees, total rupees. Assets, it is rupees, total rupees. First of all, we will write the asset side. So here the cash, we are already prepared cash account. In that we found the cash balance is 80,000. Next is the cash at bank also 80,000. Here the debtors is 1,20,000. Stock 80,000. Here the appreciation of stock is 20,000. So stock amount is 1 lakh. Next is machinery. 2 lakhs less. Here the depreciation on the machinery is there, that is 26. One lakh 74,000. Next one is buildings. Here the buildings is 3 lakhs. So now we are going to the liability side. Here the bills, payable is 40,000. Creditors, here the creditors is 60,000. Outstanding expenses, here is 40,000 less no need to pay 10,000. So we are deducting that amount 30,000. Next is capitals of the partners. Naidu, Shekhar, Harish. Here the Naidu is 3,68,400. Shekhar is 3,05,600. Harish is 50,000. Here the total of the all is 7,24,000. So in the two sides of the total here is the asset side 8,54,000. 8,54,000. So this is a problem, friends. When new partner not bringing the goodwill, creation of the goodwill by the old partners and written off by the old partners. So students, I will meet you with the another video. Thank you.